right. So how are you guys doing today?
Pretty good.
Good. Yeah, I'm good. Thanks for asking. Just to introduce myself, my name is Tyler. I am a strategic account manager at Bloomberg. What I do is I basically work with a lot of different types of financial clients across the West Coast. Everyone from your pension fund to an asset manager to a family office, lots of different types of clients. So that's kind of what I do. Does anyone here know what Bloomberg does?
Yes. So I took the Bloomberg education there.
Oh, you did
the
BMC.
Bloomberg, was it? Yeah, the
Bloomberg Market
Bloomberg
Concepts.
Yes, market concepts. So knew a little bit, and I saw the ESG. There's also like a separate ESG session.
Oh, nice. Yeah, so you're probably already good on all this stuff. Yeah.
I haven't actually touched the software too, but no, little bit.
Cool. But does so do you know what we kind of do?
Yeah. So it's really like a market data provider. It provides all sorts of data from financial stocks, fixed income to bonds. Basically, like everything in finance has the entry.
Yeah, exactly. So you can kind of think of us as just kind of like a central nervous system of the financial industry, right? We have the Bloomberg terminal, which allows investors to make better decisions, make better investment decisions, and find market color about the market on a daily basis. We have our news organization as well, which you probably see playing on the TVs around here and stuff. But yeah, so you can kind of think of us as just trying to bring transparency to the financial markets, right? One of the things that we work on is ESG. We'd like to enable our clients, our investors, to help make ESG decisions, and that's what we'll be talking about today. You had a quick question?
Yeah. Do you mind if you spell your last name, please?
Sure, yeah, it's ball, like a basketball.
Okay, sounds good, thank you.
Yeah. All right. So this is going to kind of be our agenda today. We'll just start going through it kind of quick. I'm going to ask, you guys know what ESG is?
Yes, environmental, social, and governance. What's on
Exactly.
there?
Yeah, and you guys know what kind of the concept of ESG investing is?
Yeah, so it's a way to measure whether the company is sustainable in all three different ways and whether they're doing the right thing.
Nice, yeah, exactly. So really it's that, it's the philosophy that the three tenets, environmental, social, and governance, can have an impact on company success and returns, right? Environmental is pretty self-explanatory. What do you guys think something social might be that like a company does?
Charity.
Workers' rights.
Diversity and how they treat their
Yeah,
employees.
diversity and inclusion, that's one.
Like donations to support causes.
True, yep, stuff like that. Supporting small businesses, for instance, I think Goldman is one of your other presenters, right? Like one thing that they do is they have like 5,000 small businesses where they they work with diverse founders of small businesses in underserved communities to help get advice and capital, right? So things like that kind of help out the community and diversity, inclusion, etc. And then finally, governance is kind of more about transparency. Are you kind of telling us, what you're doing? Even if you're not really doing great on the environmental front, are you still telling us that? And are you providing us an action plan to do better, right? Technically, companies don't have to do any of this, so it can still mean something when they do, right? Also, it could be things like gender diversity in leadership, right? Is there 50% women on the board, right? Are genders and diversity represented equally in company leadership, things like that. So that's kind of what that is. Why is ESG important? Now we don't have to go through the first one, especially the first part of the slide is kind of corporate mumbo jumbo, but what you can really take away from this is that 82% of asset owners, and you guys know the difference between asset managers and asset owners. Yeah. So asset owners, just to confirm, asset owners, people who own the assets and are deploying them, like a pension, for instance, right? Whereas a manager would be, like Granger Peak or BlackRock or some a firm that manages others' money, right? 82% of asset owners have admitted that they've done some kind of ESG research and have paid some attention to it in the past. 100% 128 managers with $43 trillion under management have committed to net zero greenhouse gas emissions by 2050 or earlier. So definitely still in the forefront of the investment community. Finally, regulation is also a thing. So, say you wanted to start a company and you wanted to serve clients in Europe. In Europe, you actually have to be environmental, you have to be social. It's more of like a requirement there. The government might say, what are you doing to do this? And you might, there might be some kind of repercussion if you don't, right? So that's more on the regulation side. It's also kind of important. And before we go to the next slide, I kind of want to ask you guys, from an investor's perspective, why might someone be interested in a company that is doing well in the ESG front? Sure.
Things that focus on ESG, these are I feel like sustainability initiatives. It shows that their business can be sustainable, focus on workers and the government's, the company's view by the outsiders.
Yeah. So why would an investor care about that?
Sustainability means returns over the long term more.
Potentially, yeah. Good answer. Sure.
So consumers have been paying a lot of attention to sustainability of these companies. So investors, when they're looking at that, are also looking at what consumers would be thinking.
Exactly, yeah. For instance, like you said, hey, a lot of consumers, especially, us in the younger generations, right? We're looking for, hey, is the product that I'm buying off the shelf environmentally sustainable, right? That can help drive sales, for instance, help drive the company's profitability. What else?
Yeah, so I would argue that although the company's its fiduciary duty is to drive return to shareholder, but I will argue most of the time ESG will have a correlation with the return, right? If you treat your employee well, if you have the right board, if you're a great contribution to the society, I have to do, but if the society will reward the company.
Definitely. Awesome. Those are all great answers. Going on to this slide, just to talk about it a little bit more. First of all, let's think of reputation, right? Say you're an oil and gas company, and all of a sudden you have a lot of oil spills, right? That might not look too great for you. Maybe there's like a consumer boycott of your business, or maybe activists are doing a picket line out in front of your office, right? That type of negative publicity and negative reputational that can cause what we call reputational risk. And if your reputation is going down, it can also potentially negatively affect your stock price, right? So as an investor, that's something you're going to care about if it can also affect your profitability. Also, signaling a company's long-term approach to value, right? If a company is thinking about, long-term sustainability, 50 years out, 100 years out, they're probably also thinking about how their company is going to survive and still be profitable 50 years out, 100 years out, right? So even thinking about that can show that a firm's management has that long-term view that investors are looking for, right? Finally, serving as a proxy for management quality, right? If the C-suite of a company is going so far as to still be profitable and make sure that they're looking at the environmental, social, sustainable side as well, they're probably not doing too bad on the strategy side. They'll probably signal, and not necessarily, but can be an indicator for good management, right? You guys have anything else to add? Anything else you think might be a good reason why investors might be interested in companies that care about ESG? Sure.
Well, sorry, I know I wasn't here for most of it. I just finished my pitch, I'm so sorry.
No, it's fine.
I know I was pitching a solar fund. And I think that the part about ESG is that, for example, things like fossil fuels and finite natural resources, they're inevitably going to run out at some point. So if you have a company that doesn't care about that, you're going to have a company that's going to face impending bankruptcy or a decline in revenues, right? So I think that a company that prefers sustainable alternatives will, in itself, sustain its own revenues into the future.
Yeah, no, that's a great point, and that's definitely a potential for the future, right? And did you have something as well?
Oh, I was just gonna say, I'm not sure if someone mentioned this morning, but just like personal
Exactly. Yeah. I mean, think about this. Say you're an investment manager that caters to retail investors, right? You know, you buy a Vanguard fund or you buy BlackRock fund, right? A lot of people who are investing, especially in some of these younger generations, are very socially conscious as well, right? They want to make sure that the money they're putting to work isn't going towards things that are going to harm the environment. So that's also a reason why you might think about it as an investor, right? Just being a fiduciary. So those are some of the reasons why investors might care. Why do you think this might be important to you guys in the future? And we love talking about investors, but I think you guys are here doing a stock pitch competition. Obviously, probably a little bit interested in the world of finance, right? Say you were, 8, 10 years from now, or whatever, 5, 6 years from now, you're an analyst at a company, right? Or even when you're in college, maybe you're in the college investment fund. Maybe your higher up comes to you and you're like, hey, we need to find profitable companies, but we also need to find companies that aren't polluting the environment, right? That's something that you might actually have to do, and that's kind of what we do also on the Bloomberg side to kind of help empower investors in that way. So I'll just quickly show you some of that in a second. So you don't have to look at the stuff on the left as much. I don't know if you guys have ever seen a Bloomberg terminal before. If you ever watched Billions or I think Industry on HBO, both of those shows have Bloomberg terminals actually in the show, which is kind of cool. We love watching it for that reason. But this is what a Bloomberg terminal screen looks like. It kind of looks like it's out of the 80s because it makes it really fast, and that's what our customers care about. But this is a screen where we're looking at ESG, right? And say, that problem that I just gave you guys before. Say it's okay, we actually want to invest in a consumer company, but we want to invest in the consumer companies that are, let's see what we have up here, that aren't compensating their board too much, right? Or maybe ties their board compensation more to things like sustainability, right? Hey, we're not going to increase your pay until you make the management structure of your company more diverse, that thing, right? We can find out all that information in here and what they're doing. Or say it was an energy company, right? This is ExxonMobil. We can say, hey, how much oil is ExxonMobil spilling in a year? How many greenhouse gases are they emitting? This is, if you want to kind of go down into the weeds as an analyst, this is kind of the type of information you would look for. If you wanted to look at it on your own, even without, a Bloomberg terminal, you can find all this information in a corporate social responsibility report, right? So someone in a previous session asked me how they would find information like this, and that's where you're going to find it all, just for the future if you're looking at your ESG pitches. But this is a little granular. Honestly, most people don't have time to dive into the nitty-gritty details like that. So what a lot of people do now, and something that you'll see in the financial industry, is people use what we call ESG scores, right? So we have scores for different facets of ESG, right? We have an environmental score for a company, a social score for a company, a governance score for a company. We're taking all that data from the 100-page long report and kind of crunching it through an algorithm and getting a score for it. So, if you're an analyst and you have to look at 100 companies a day, your boss comes and say, hey, we actually need a company that is environmental, is social, is sustainable, whatnot. You can go type it in and say, hey, well, this company looks like they're doing pretty well in waste. No, they're doing okay in waste management. They're doing really well in water management. They're not using too much water. But on the ethics and compliance side, it looks like they might be having some issues. So maybe this isn't the best company for us to invest in. And this is kind of a cool thing that you can look at. If you're looking at a company, you can go and easily make decisions based off of data like this, right? So it can help kind of influence your investment decision in that way. Does anyone have any questions on this? No? Sounds good. All right then. I think in this case, I guess we're coming up onto kind of the last part of my presentation today. And that is going to be kind of a role play where you guys can be the portfolio manager, so to speak. And it's not going to be an easy question. The last groups have definitely, you know, it's a hard question to answer, but I'd love to see what you guys come up with. How many people do we have? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So do you guys just want to split up into 2 groups? That'll work? Yeah. Yeah, you guys are already in 2 groups pretty much, so that's perfect. All right, so I want you guys to imagine that you're a portfolio manager at a large asset manager, right? Most of your clients are public pension funds. Think, you know, the guys who manage the money of people who work for the retirement of people who work for the state government or the local government, right? The firefighters, the police, all those guys. A recent meeting that your CIO had with one of your largest investors has created a conundrum. Their state legislature has passed a bill stating that they can no longer invest in companies that are significant emitters of greenhouse gases, a key hallmark of energy companies. Plus, your portfolio is actually highly weighted towards energy companies right now. It's a key contributor to your total return, right? You can't risk losing the strategic client's business, but you still need to make money for the client as well. What do you do? Just think about it for a couple minutes. I know it's definitely not an easy question, but I'd love to hear what you guys have to say about it. Just come back in 3 or 4 minutes. And feel free to ask me further questions. That was kind of like a lot.